Welcome to Retire ATL with Aaron Vincent and Matt Decker. Aaron and Matt are part of the team at Vincent Financial Group, an Atlanta area firm that focuses on preparing people for retirement. They're also popular radio and podcast show hosts. And now it's time for Retire ATL.
73.
73 is the next one.
73 is the next age.
Still not my money?
It's still not your money.
When do I get my money?
But
Now
guess what
comes-
starts at 73?
What?
Let's say the same time. 3,
Forced-
2,
oh.
1. Forced taxation.
I jumped the gun.
Harmonized.
Forced
Oh.
taxation.
We're
I
not
mean,
good
what-
at harmonies.
I know. What a statement. What a title.
Forced
taxation.
taxation.
Now you may have heard of this in a different term.
Yeah. You may have heard RMDs.
Okay,
Required
yes.
minimum distribution, also known as forced taxation.
That's right.
Matt's a big fan of RMDs. Matt is a huge fan.
I'm not a fan of RMDs.
I'm
I don't know
kidding.
why
If
you're
you
putting
go
that
back-
on me.
if
Don't
you
put
go-
that on me.
If you go back to the archives, go back to about 2 episodes ago
That
in
gets
the
heated.
Retire ATL podcast.
Don't put that on me.
You can hear Matt just go off
Rant.
on RMDs. Not a fan at all, but for good reason. Some good information there as well. All right, so 70, 73, forced taxation, RMDs. What can we do to help mitigate some of the tax liabilities?
Let's take a little bit of time on this.
Yeah, I think we
Tying 70 and 73 together. At age 70, of course, you get your maximum Social Security benefit if you delay, and you've got 3 years to start creating your own plan for your money.
Hopefully you've done it before this.
Yeah,
But if you
hopefully you have.
haven't, now it's critical.
Now you're in the forced taxation red zone because at age 73, the government, Uncle Sam, they're going to start requiring you to draw down on all of your qualified accounts.
Now, what if you don't? What if they require it and you're like, no, I'm not doing that?
Well, there's nothing wrong with that, right?
Right. What does that mean, though? What happens to me if I don't do
Well, I assume nothing happens because it's my money,
that?
right?
Right. No, but that's not true, though.
Oh, it's not.
What
There's
actually
going to be a
happens?
knock at the door.
Penalty time.
Yeah, huge penalties.
Not an
Penalties
option.
on top of taxation.
Okay.
So you can't sit there and not comply with forced taxation. That's why it's called forced taxation, because there's no such thing as not complying without severe pain and penalty.
Now, the government will famously forget a lot of things. What they will not forget is forced taxation.
That's
for you.
correct.
They will
Your
not
money.
forget that you turned 73.
They will
I
not.
promise you
Nope.
that.
They'll
So
celebrate your birthday harder
Oh,
than you
yeah.
will.
They
Oh, yeah.
will. They do for the rest of your life.
Yeah,
They
they
celebrate
celebrate
your
it
birthday
hard.
harder than you do. So 70 to 73 is the window where you have time still to get your money in the right order, get your money in the right buckets. There's different types of buckets. There's tax deferred monies. That's all your qualified accounts, the accounts we're talking about where there's forced taxation. There's taxable accounts. That's like a brokerage account where you get 1099s every single year. CDs,
money markets, all
money
that.
markets.
Anything you get taxed on that year.
Yep, 1099s. And then there's tax-free dollars. There's accounts where you don't actually have to pay taxes on that money anymore. It's over the tax fence. That would be like a Roth IRA, municipal bond income, cash value life insurance can be considered a tax-free vehicle there if you do it right. And so
there is a mathematical correct ratio. Now, everyone's is different. It's not like a one size fits all, but there is a correct number of how much money should I have in my first bucket,
Yep.
second bucket, third bucket. There is a correct number to make this forced taxation as little as possible. That's where you're heading to.
Yep. And so a lot of times the way that we get the money into the right buckets is through things like Roth conversions. And the reason that this 70 to 73 age range is so important is because once you get to required minimum distributions, once you get to forced taxation, a Roth conversion does not satisfy your forced taxation for that year.
Right.
Before that, if you do a Roth conversion before age 73, that money has been moved over the tax fence. It's now no longer subject to forced taxation because you've paid the tax on it on your own terms. If you wait until 73 to start getting your dollars, your money, into the right tax buckets in order to try and pay as little in tax as possible, you've really hamstrung yourself because all of your Roth conversions that you're doing past age 73 are not going to satisfy your RMDs, which now means you're definitely going to be paying more in tax than you needed to pay. And that's why age 70 for me, is kind of like that forced taxation red zone, probably the number one age on the list because it does go under the radar. People don't know you got a 3-year window to get things right. Otherwise, you've made it a lot harder on yourself to get your money into the right buckets.
And if you're